Cooper's survey that 75% of business owners who sold their businesses profoundly regretted the transaction just 1 year later. And it's not because they didn't get enough. Maybe they wish they had got a little bit more, but usually it's because they're going through this liminal phase. They've lost their identity. They don't feel like they are valued or have value in the world anymore. So just be prepared for this phase.
Welcome to the Profit Answer Man podcast. We believe the purpose of business is to make lots of money. We'll show you how to scale and grow your profit and cash flow, all while working less. We're a big fan of the ELF model: easy, lucrative, and fun. If you're the backbone of America, you deserve to be well rewarded for that. Listen in to see how other business owners are doing it and how to maximize your profit and cash flow. Welcome to the Profit Answer Man, Nate Collins. It's great to have you join us today.
Thanks, Rocky. Thank you for having me on the show. I'm so excited to be here.
And I'm excited for the conversation. Can you share a little bit about yourself and your business?
Absolutely. So the reason I'm here is because in 2019, I sold a business for mid 8 figures. It was a good middle market business, about 100 employees in 2 continents. We were headquartered in New York. We had offices in Los Angeles and London as well. And we were a licensing company. And I tell you, I really loved running that business. We just had such a good team. I'd taken it over in 2011. And with the help of the team, we just completely re-energized the brand. And we did a lot. We went from musty and dusty to probably the most dynamic company in that industry at the time. And that's probably why we sold for such a high multiple, which we can get into in a minute. But it was wonderful. And I really didn't have any thoughts of selling the business. But as things happen, Rocky, when you start doing great things, people come knocking, and we got an unsolicited offer. And 9 months, I'd say probably about 9 months later, I was no longer a CEO. So fortunately, we had just a very tight business, a great business, and we sold it was a tremendously profitable exit, but I was not prepared. Personally, I was not prepared for that exit. And I just really didn't even know what personal preparation meant. So I ended up selling the business, paying millions of dollars in taxes that I could have avoided, ended up with this little family office. I'd come from the finance world, so I went back into it. I worked at a hedge fund a little bit, but that really wasn't fulfilling. And I was working on my personal finances, and I really got into that. And so eventually I realized that I really wanted to get into the wealth management space, which is what I do now. I work at Raymond James. I'm a wealth manager. I work with other business owners, helping them optimize the value of their businesses and their personal investments, and really kind of doing what I did for myself for them, and ensuring that if they're going through a transaction, they don't make those same mistakes that I made.
Before we get to the mistakes, I find
That's a long conversation.
A lot of business owners don't like to take money out of their company and invest it in the stock market, mutual funds, and so forth. And I am a big fan, especially with Profit First, of taking that profit money, removing it from the company, and building another nest egg. Whether they decide on real estate or stocks or some other way of doing it, I really think you need to protect yourself by having money in more than one place. I don't know why business owners are so hesitant, though. Some of them will do it through a 401k, but a lot of times they don't even, like, we just went through the end of the year. Everyone's like, let me buy a truck. I'm like, no, why don't you go fund your retirement account with 50, 60 grand? Because you can do that, and you get to keep the money and get the tax deduction. Why do you think business owners are so hesitant to do that?
I think that's a great question and a dilemma that I think even I had as a CEO. And I think it's because you, as a business owner, first of all, you're used to bootstrapping, and you never feel like you have enough. And you always want to have that extra buffer because volatility happens, and you just want to be prepared. You spent so much energy on this business. So that's one, just being prepared for uncertainty or being prepared for unseen circumstances. The other thing is, I think business owners are trained to keep money in the business because of the tax advantages. And that could be through buying another truck for their business or for buying another building. for their business. That there are so many ways that you can diversify your portfolio through investments. I wouldn't recommend necessarily another truck if you don't need one, because that's a depreciating asset. But you could buy a warehouse, and there's some really great tax advantages of doing that. Then also, as you mentioned, your 401k, that is often an overlooked vehicle for business owners. Not necessarily your 401k, but any retirement vehicle. If you are making if you are a highly profitable business, there are retirement plans that allow you to contribute up to $450,000 a year, which is tax deductible to your business and tax deferred to you. So that if you retire in 5 years, you have an extra $2.5 million in your pocket. These are things that business owners should be talking to. They should be talking to their CPAs. They should be talking to their financial advisors about these things, because there are other ways to have that tax advantage withdraw of assets from their business so that they can diversify their portfolio. Because you're right. If it's all concentrated in your business probably, well, it's not diversified, and it's probably the most volatile asset that you have.
It is. And that's why I want safety outside the business. And here's the thing. If you knew your business could blow up and you knew you'd be safe, you take a lot more risks. You take a lot more bold action. You put up with a lot less crappy customers. So it gives you that fortitude to say yes and no.
Yeah, you probably have a stronger business.
You do. Like, I don't worry, because we have our extra. I don't even put it in retirement plans, but I do, but I also have cash invested that is inside the business. It's a reserve. If I need it, I can get it. But while I'm doing nothing with it, it's making me lots of money every month too, because the markets are doing well and opportunities are there. You get a bit of diversity and another income stream.
Yeah, and there's so many things that you can do if you have that sort of cash pool, whether it's inside your company or whether it's in your own personal name as a business owner. There are so many types of securities-backed lending options or asset-backed lending that you can work with a wealth management firm like mine. We offer that kind of thing, or with your local community bank, whoever your banker is. They have those sorts of things which allow you to get access to capital to fund some short-term cash need that you have in your business without taking money out of this other investment and having to pay taxes on it. So it's great to have that other reserve of money.
Correct. You can borrow against it. And the cool thing then is, technically you're forced to pay it back, because I know so many business owners make investments and they never pay their investment back. So this kind of like puts a little bit of structure around it to say, I got to pay that loan back to myself. And it's another way also to pay yourself interest to get a business deduction. So that we're not going to dig into all. Let's get back to the other thing, though. You said you made a lot of mistakes when you were selling out. Can you just elaborate on some of the bigger ones?
Yeah, absolutely. So the easy ones to point to, or one I did not plan from a personal perspective. I planned from a business perspective. I had a great investment banker, crushed it. She was amazing. I had a great M&A attorney, kept me safe from future liability. Make sure you have those things. Those people are so invaluable. We had a quality of earnings. We had an accountant do a quality of earnings, which is important for businesses. If you're selling a business for, say, more than 10 million, having a QV accountant help you with that, very important. So that was all covered. But personally, I didn't prepare. And it's part just personal arrogance. Like, I just thought I knew about personal finance, which turns out I didn't know anything. Now that I know, I didn't know what I didn't know back then. Now I know what I didn't know. And then the other thing is I was cheap. I was just cheap. I was jumping over $1 to save a nickel. And don't do that. Just don't do it. Work with advisors. They're so valuable. That's why they exist. So because of that, I did not do any tax planning, and I ended up paying millions of dollars in taxes. I lived in New York City. So the tax rate in New York City is income tax rate is 12%. Plus, federal tax at that time, I think it was 37%. So I was paying 50% tax on all my income from that. Just the way that the compensation structure was structured. But even if it that was just for short-term capital gains and for ordinary income. And just even for capital gains, long-term capital gains, it was a third of the income, 33, it's close to 33%. So, I could have avoided a lot of taxes had I just properly prepared. Had I talked to my CPA, had I had a financial advisor who asked those types of questions, it's not their fault. It's my fault because I didn't bring it up,
So let's talk about that, because this is something that I see a lot of my clients struggle with. Their financial advisor and their CPA and them don't sit at the same table. A, and B, I think they're hiring the wrong tax people, maybe even the wrong financial planners, because they can't get them to a table and no one is actively saying, hey, did you know? Did you know?
Right.
Did you know?
Right.
And usually I'm the one bringing that up. And that's fine. I mean, I don't mind doing it because I love saving on taxes and I love making people money. But these other experts should be there because I know enough to be dangerous. They know enough to dot the T's and, cross the I's or whatever they're supposed to do. See, I got that wrong. That's why they're there, to make sure it's done correctly. No, because there's so many different little loopholes and intricacies that you have to be aware of.
Yeah, absolutely. And the way I look at it is 98% of accountants, probably more, are really focused on just getting your taxes done. And they talk to you a couple times a year and they get your I guess your numbers, and they just want to get your taxes done. They don't get paid a whole lot of money. They have their own system. And so unless you're sitting down and you know which questions to ask them, they're probably not going to say, hey, you should be thinking about this. They're usually looking backwards. Accountants are not typically looking forwards. And then your financial advisor, 98%, maybe more, are really just focused on what your investments are. They say, what money do you have? This is how you invest it. They're not thinking about your entire financial portfolio, which includes the value of your business, or includes an upcoming business liquidation, or includes your ability to extract cash out of your business to diversify your portfolio of investments, or the other way around, to extract cash out of your financial assets, your personal financial assets, to fund your business needs. That's typically not the things that financial advisors are looking at. And that is why one of the things that I recognized when I was kind of going through this and becoming a wealth manager, I thought to myself, well, look, I think I can really help business owners because I've been there and I understand those needs.
And we talked about this before we hit record. You're not the normal person in that role. In other words, you have a vast variety of knowledge that most of those people don't.
Yeah, you're probably hard pressed to find another wealth manager who's sold a middle market business through a successful auction process. So just going back to what you were asking, what are some of the mistakes I made, because I don't want to necessarily belabor this point, but I wasn't financially prepared. So I ended up paying a lot of taxes. The major mistake that I made was that I didn't really understand the emotional toll that selling your business would take as you're transitioning to the next chapter. People would tell me, they would say, listen, selling a business is hard, which it is. Going through due diligence is really hard. It's like having a third job, right? You have your business, your first job, your family, your second job, or switch those two depending on your work-life balance. And then now all of a sudden you have a third job, which is due diligence. But then once that's done, the day after you sell your business, nobody calls you. I think my lights just went out. It's okay. Nobody calls you, maybe except somebody from Morgan Stanley will call you and say, hey, I saw you just sold your business. Do you have any money you want to invest? But generally, nobody calls you. You are not relevant in that industry anymore. You are not relevant to that company anymore. And I say that, and it sounds really, I guess it sounds negative, but I'll also say this. I hope that everybody who's listening to this podcast has an opportunity to sell their business at some point, because it is a tremendous experience. And it is so gratifying to come to the conclusion of that chapter and be able to have the flexibility to then go ahead and do anything you want afterwards. But I'd say this, be prepared. Be properly prepared to move into that next chapter, because what happens is that your identity becomes so ingrained in that business that you have either built or you took over or that you're running, that once you sell that business and it's no longer there, you have this giant void in your life. You have this void that is your identity. It was your, I'll backtrack. When I had my business, I had a purpose. My purpose was to run my business, support my team, support my clients every day. And I loved that purpose. I had my community, that team, the clients, people in the industry. And I had my identity. I was the CEO. That felt great. I liked being the CEO. I liked telling people I was CEO. Sure, it's vanity, but I was the main decision maker. I loved that identity. And then I sold it and it was all gone. It was just gone. And that took a huge emotional toll on me. I spent about 3 or 4 years going through depression. Not like that I needed drugs, but it was very difficult period of time that I hope that nobody goes through. And that's why I do this. That's why I have these conversations, because I don't want any other business owners to go through what I went through. But it's common. There was a study, a South African study, that followed CEOs and found after they sold their businesses or after they exited their businesses, they went through what the researchers called a liminal phase. A liminal phase, which is between two periods, a period that's marked by uncertainty, feelings of uncertainty, worthlessness, confusion, regret, depression. There is a PricewaterhouseCoopers survey that found that 75% of business owners who sold their businesses profoundly regretted the transaction just 1 year later. And it's not because they didn't get enough. Maybe they wish they had got a little bit more, but usually it's because they're going through this liminal phase. They've lost their identity. They don't feel like they are valued or have value in the world anymore. So just be prepared for this phase. And there are certain things you can do to get prepared for that.
And that's a big part of what we talk about on our other podcast, Rich Your Soul, is the meaning part of life and how to get ready from that. And we always tell people you have to, I'll use the word retire, but for business owners, it's not necessarily retire, but you have to retire to something. You have to sell your business and be ready to go to something, whatever that next thing is. Not to say you don't take 6 months or a year off. That's fine. But you're going somewhere, not just it's all done. And that's usually the story. The papers get signed and you go home and then you just watch the bank account waiting for the wire to come in. And then the wire comes in and you're like,
yeah. I mean, that is a great moment. The wire comes in, that is a great moment, but that feeling lasts for about 5 minutes.
mm-hmm.
The feeling lasts for 5 minutes. And I can tell you that although we all strive for financial freedom, for personal prosperity does not equal personal fulfillment. And you are not going to feel fulfilled with a full bank account. So there are other things that make you feel fulfilled. There are thousands of psychology courses on this that you can find. For me, my business coach told me it's 3 things. And hopefully people who are listening to this can take this and think about it for a bit. But for me, it is number 1, purpose, having a purpose that is something greater than yourself, whether that is your faith, your family, or something else, but your purpose, and it should take up a lot of your time. For me, my purpose now is to support other entrepreneurs and executives who are going through what I went through. And that takes up my full day, right? The second thing is community. Who's in your community, building your community outside of your business. I mean, when you are running your business, the people in your business are the people who you see the most in the world. And they're probably, a lot of them you think are your best friends. But once you sell that business, they might send you a holiday card, but they're not the same types of friends that you develop outside of your business. And the third thing is health, and that's mental and physical health. So prioritize health. Start prioritizing health today. And there's interesting, Rocky. There was a Dutch study that found that business owners who prioritized personal well-being, which is what I'm talking about, personal well-being, had more successful companies. There's a direct relationship between personal well-being and success as an entrepreneur. And it turns out that personal well-being is a greater predictor of success than the other way around. So I tell people, start prioritizing personal well-being today. That is purpose, community, health. And you will end up thriving, not just personally, but in your business too, in all areas of your life. And that makes sense.
I don't really talk about it on this podcast. There's a
Sorry.
reason. No, but there's a reason I have two podcasts. What I found is when someone is drowning, I cannot sell them swimming lessons. Okay. You just got to save them.
Yeah.
And so this show was kind of started to say, hey, if you're struggling with the cash, let's get you on solid ground. My other podcast is, okay, now that you're not drowning anymore, let's teach you how to live the ultimate life. And those are the topics we go to. We talk about longevity and health and purpose and meaning and spirituality and relationships and how it all comes together. You're an entrepreneur, you're busy. How are you going to teach your kids to be entrepreneurial? How are you educating them? How are you teaching your employees to be financially savvy? Because if your employees aren't financially savvy, how are they going to help you to be profitable? They're not. And so we do all that bigger stuff there. And I don't always remind people here. So this has been good because I get to remind them that, hey, if you're at least paddling, you can start to learn these other things because they, like you said, they will help you thrive in the business as well.
I have an analogy for entrepreneurship, which is along those lines, which is, when you're working for somebody else, you're on this boat. You're on this boat, which you're being fed and you're safe. You have a place to sleep and you're dry and you're safe. But you see this island out in the distance and you see all these people partying and they're having a great time. And you're like, hey, what are you guys doing over there? And they're like, we're entrepreneurs and we made it big. Jump. It's awesome over here. Just swim over here. Join us. And then you jump off that boat. And then all of a sudden you're in that sea and you have to now you have to find a way to swim all the way to that island. And it's a lot further than you expected it to be. And there are sharks swimming around you. And there are thousands of dead entrepreneurs down on the bottom of the sea that you didn't see when you were on the boat. And you turn around to look at that boat and it's already gone. And you're like, what do I do now? So anybody who is paddling, anybody who has made it to the paddling phase, congratulations to you. All the respect in the world. It is so hard.
The other thing we talk about is entrepreneurship is a self-development journey. Only as far as you improve yourself will your business grow. And you said that before we hit record. You've been part of groups like Vistage and you did Traction Light from EOS and those types of things. And if you're not growing and doing these types of things, then your business is going to hit a plateau and you're not going to break through it. I think you've got some experience with that as well.
Yes. So I was a Vistage member from, I think, starting in about 2015 through when I sold my business. And I would say it was incredibly helpful for me because for those of you who don't know, Vistage is a peer-to-peer CEO mentoring group. It's the largest in the world, I believe, with 18,000 members plus. And you get together on a monthly basis with a group of CEOs, typically anywhere from 10 to 20 people in a room. And you talk about the challenges that you're facing and having the insights from other people who have been walking in your shoes, those other people who have experienced the same things, is tremendously valuable. It's better than getting solutions from a salesperson. It's better than getting solutions from your team who may not understand the whole picture. It's a great experience. I highly recommend everybody who can to take a look into Vistage groups. And I'll tell you this, your employees want you to be a Vistage member. Your family wants you to be a Vistage member. Your investors want you to be a Vistage member. Your customers want you to be a Vistage member. It just makes you a better person, a better leader, a better business person in general. So, my team really helped me go through this transaction process. They didn't tell me about the personal finance bit, or they did warn me about how difficult it would be to transition into the next phase. But just like parenthood, right? When you are about to have a child, people will say, parenting is really hard. You say, yeah, I know, I've heard, I'm ready. But you're not really ready until you're in it, And you're like, well, this is a lot harder than I expected. So, but my Vistage group I would not be here today. I would not have had such a successful exit if it were not for my Vistage group. And then you were mentioning traction. Yes. So when I first took over my company in 2011, it really had a lack of processes. That was probably the number one reason that we were in distress. The company was in distress. There was just a lack of processes, a lack of leadership. It took me a few years to realize that there was just no organizational process, and the big factor was that there was really no organized communication. So I did read Traction, and I took a lot of elements from Traction, that EOS, and it changed everything for us. Once we had a documented, predictable organizational communication process, everything just started getting better and easier. I could have stepped away from my business for 6 months and it would have been fine. Everybody knew what they were doing. Everybody knew when they had to develop their KPIs and OKRs, when they had to report on them to the other teammates, when we did our weekly check-ins with our managers or with our reports, when we did our monthly all hands review, when we did our bi-weekly managers meeting. They could have done it all without me. And I guess after I sold my company, they did.
And that is very true. It makes life easier. That is really the key. And you get asked tough questions and you have to answer them. And people hold you accountable. And I think it's good to have something like that. I belong to similar types of groups and they help me in my business. And you got to figure out it isn't so much that it's Vistage, is you got to find the right group. It's
Right.
the people. Two Vistage groups are completely different. You have to find the group that really matches to you and that you can work with. We've been talking a lot about exits, but I don't think people realize, and I know you do, half of exits are forced by death, in which case you don't have to worry about it, unless it's your partner. Divorce, right? And so that's why you got to keep your spouse happy. Disability, why you have to keep your health, right? Disagreement. And this is why you really have to pick your partners. And disaster. There's another one, though. It's lack of cash flow. Business kind of ends because of that. Maybe that's the disaster, the cash flow. It
Yeah.
falls underneath that. As much as we may not want the exit, sometimes exit come to us. And that's why I always love to say an exit ready business is a fun business, a valuable business. And if opportunities or if life hits you, you at least can make it through that.
Yes, I do a quarterly business exit planning workshop. And I tell people workshop is not just for people who want to sell their businesses. It's for anybody who values preparation, because 50% of businesses that sell because of those 5 Ds. And if you are not prepared, those 5 Ds turn into 7 Ds because you sell at a deep discount. And you don't want that. If you are prepared, you are less likely to sell for one of the 5 Ds because you're prepared, and you are more likely to optimize the value of your business if you do have to sell it. So as I was saying, to you earlier, I have a friend who always says sell too early. He's a repeat entrepreneur. Actually, now he just buys businesses, turns them around, and sells too early. He says, I always sell too early and I see this with a lot of business owners that I come in contact with, is they'll say, oh, my business 3 years ago, we were doing 5 million in EBITDA, and now we're doing 500,000. And it's really difficult to turn that around unless you have a really good plan. But typically there's a reason that they are suffering from that, I guess, downturn in performance. So I'm not saying go out there and sell your business. Don't do that. What I'm saying is be prepared. As Rocky was saying, just be curious, read books, always improve your business, surround yourself with other people, other business owners who can help you be prepared and improve your business. And just beware that misfortune can strike at any time. So have your exit plan ready.
And that's key. There is one thing that everyone probably really wants to know. You got in that business and you dramatically shifted it, made it vibrant, and really took over the market. What was it that you did to be able to achieve that kind of success?
I'd love to say how smart I am, but it's not true. I think I'm just like everybody else. It was a mix of luck and perspiration. We had a good team, but that team took a long time to build. Probably had a 98% attrition rate from when I started. I think there were only 2 people left from when I started to when I left. But we built a great team of people who were passionate about the business, who were aligned with the vision that we had, and that communication. I say the EOS system really just propelled our business, made us more dynamic, more curious, more ambitious, and that between that and having the right people in the right seats, there's nothing that can stop you.
And that's the key, right people, right seats, with the ability and the desire to do the job. And EOS does do a big part of that and help you evaluate that. And you also talked about vision. And it's, these are the things that most business owners, granted, you're not going to do this when you're drowning, but if you don't do this during good times, you're going to find yourself in bad times because you didn't create the vision, you didn't ensure the people were on board, and then you wonder why things slowly drift off course, and then it becomes a lot of work to dig out of that hole.
Yeah.
And that's literally the key. Do the work up front. And I can't tell you how much I struggle to get business owners to listen to that. Do the work up front, because the earlier you do it, the easier it is to do and the better the results you're going to get, and the less headaches and aggravation.
Yeah. And I completely understand how difficult it is to set aspirational goals or just goals in general. I understand how hard it is to work on the business rather than in the business when you are drowning, but try to take some time to do that because it's still valuable. It will still help you. It will help you see things from a different perspective. And that was probably the first 2 or 3 years of my experience running this business, was we were just drowning all the time. But we were able to come out of it partially by luck and a great team and good vision and working on ourselves. We were just always working on ourselves. And so that it's important.
That it is. If people would like to learn more about you, maybe connect with you, how do they do that?
So the easiest way is to email me, which my email address will probably be in the show notes, or contact information will probably be in the show notes. But in case it's not, it's nate.collins@raymondjames.com. Super easy. I'm also easily findable on LinkedIn if you just type in Nate Collins, Raymond James, or on Google. And I would like to encourage everybody who's listening to attend one of my free business exit planning workshops. It's a webinar. I do it on a quarterly basis. It's interactive. I have a workbook that helps you identify your goals, and you'll walk away with it with action steps for the next 3 days, 30 days, and 3 months that will help you just begin your exit planning journey. And you can do this if you're going to sell your business in 3 years, 3 months, or 30 years.
There you go. I encourage you to check it out. Thank you so much for joining us today.
Thanks, Rocky. This was wonderful.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.